Hello, traders. It's 8 a.m. Chicago time on Wednesday, the 31st, the very last day of March, the month, and Q1. Today's an important day in the markets. Thanks for joining me. This is episode number 1963. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's dig right into what's going on here. The market is trading a slightly higher, slightly higher than where we closed yesterday. Still trading inside of the range, yesterday's range, pretty tight. This morning, we're looking at the Nasdaq leading. The Nasdaq's up 80.75 points or 0.63%. The Russell's up 8.7 points or 0.39. Cable's up this morning. The British pound's trading almost at 140, trading at 137.71. The S&P 500 up 6.5 points. The Bund's up 23 ticks. Gold is slightly up, still below 1,700. The bonds are up 5 ticks. The laggard today is the yen. Crude oil still hovering around the $60 handle, trading at 60.38 in the May contract. This is WTI, down 0.38%. Euro stocks 50 are off 9 points. The DAX is off 32 points. And silver trading at $24.12, off a penny and a half. That's where we stand. The Dow's off 11 points. Very mixed market, neutral posture coming into today. And it seems like we are still coiling after yesterday's action. In terms of what's on deck, mainly this infrastructure package that President Biden's looking to push out. It is worth over $2 trillion to invest in traditional projects like roads and bridges, alongside tackling climate change and boosting human services like elder care. This is a big anticipated fiscal spending package for the markets. And then other than that, it's business as usual. Chicago PMI due out at 9:45 publicly, 9:42 for members. Pending home sales at 10. We're looking for crude oil inventories at 10:30. Fed's Bostic at 10:45, and Kaijin manufacturing PMI for March at 9:45 this evening for those who are trading the Asian session. The S&P this morning has what's going on here? The S&P has traded 155,000 contracts in the extended trading hours. The overnight inventory is approximately 10% short, 16 points of range. That is very tight. That is quite tight this morning. Balanced profile overall. That's where we stand. So overall, coming into a market that is actually trading quite light. The overnight volume is very, very light, and the range is also very, very tight. So expecting this to be a relatively dull open as a result. Not much participation overnight, and that's where we stand currently. Taking a look at what was expected yesterday. Yesterday, we expected a test of the 52.54 area. I talked about 52.54 being really a big area to watch for a test. I talked about 34 being a key test area. So the primary scenario is a push into 52 and then a test of 34, coming back in, expecting it to build a belly right in the middle here, and expecting pretty tight range. The secondary scenario is a retest lower into the low, the overnight low, and then looking for it to trend back into 64 and 68. Here's what actually took place yesterday. We open up, we don't bother to test the 52 early. We test the 34. This is 33.75, as you see in front of you here. 33.75. We expected 34. That was spot on. And then it goes to 52 and performs three tests against that 52. Spot on as well. Breaks it, goes to 53. So now we have a local triple top, weak high, expecting that to break. And with it being a triple top, the expectation was a decent break. And remember, the zone is 52 to 54 right here. And so it goes to 53 and is unable to sustain any further pushes, and then sells off, comes right back into the middle, gets into this big chop area back here, and then finally extends above the 54 to 58 and a quarter, pulls back to retest the IB and the full session mid, and then puts in a lower high and then falls right back through, and we get the closing frenzy. Today, the given that it's Q1, end of month, expect the close to be relatively aggressive. It's not a good day. It's not a good day to fade the closing move. If the market starts pushing directionally in the last 20 to 10 minutes to cash, you do not want to get stubborn with it. It is likely to run, and it is likely to run a fair amount with pretty good pressure. So I would suggest that you do not try to fight that in while you're trading today. So pay attention to the close today. Very, very important. And that's it. Overall, just sat sideways yesterday. Look at this profile, completely Gaussian, completely balanced. We have found nirvana here in the 39.45, 39.50 area as expected yesterday. I expected it to build a belly. Going back to the screen, remember, I expected it to build a belly here yesterday, and that's what we got today. Yesterday it basically consolidated inside of the prior day, which was a double distribution profile, and we ended up settling and balancing out in the lower distribution. This is a market that is coiling and waiting for further information. There's nothing here to reprice, is what this market's saying. This carries us forward into the overnight session. You can see the triangle that I put on here. We broke it. I threw this on here last night. We broke it this morning to the upside. We're trading a little bit higher, but overall, it's really balanced. Again, we have a very Gaussian profile, very normal distribution. The market is in balance, continues to be in balance, continues to be in balance quite a bit here. And so expecting the open to be relatively dull, as mentioned. We have very light volume, low range, and the overnight point of control resting on top of the full session VWAP and the full session mid. This overall creates an environment where both sides are simply in a truce and are waiting to see which one makes an aggressive move next. I guess the cat has something to say about it. And so that's where that stands. It is very boring. Yesterday's trade was pretty boring. The only thing I saw was the pullback after the break to 52, and of course the challenge of 52 several times. It looked like a long was decent there, but it went to 53. Yesterday was slim pickings in terms of trading. Okay, so that's that. I don't have much more to offer here other than to bring you back, of course, to checking and making sure you're aware of where we are on the big map, right? The bird's eye view here. As I talked about, was it yesterday or Monday? We moved the high and the low on the weekly last week down. So we on the weekly we breached the one-time framing up, but we also moved the point of control down, and this looks like it is likely to make a rounded top. I talked about this on Monday. Um, and then we are staying above this 25 area. And then yesterday was an inside day to Monday, and we're holding on top of this new balance area right here. So it is overall, we're just kind of sitting tight up against the all time high, waiting for a reason to blast through. The delta continues to fall. As the market pushes up, the delta continues to fall, which is interesting. We had a discussion about this at Convergent Trading's Trade Talk yesterday, the Trade Talk webinar. If you're a Convergent Trading member, I would urge you to watch that Trade Talk. We made the announcement about the micro the micro Eurex products. One second. We went through the contract specs and made an announcement about the micro Eurex products, the micro Eurostox 50 and the micro DAX, which are very, very welcome products. And also talked about the micro Bitcoin from CME. There are other products that are likely to get released soon. Can't talk about them yet, but there's stuff also coming in that is more micro worthy. Now, if you haven't seen the Bitcoin specs, this is a product that's trading in 25-cent tick increments or 50-cent tick values, but has an exchange fee of $2.50 aside. Um, and that's based on, I think they based it on the spread or the percent that's taken by Coinbase, Kraken, Binance, and others. But to me, that seems incredibly expensive to trade. It's definitely not a scalping product, that's for sure. So that's where that stands. Anyway, back to what we're doing here. We had an inside day yesterday, and then today we're attempting to breach the high overnight, the yesterday's high. Currently, we're holding steady against the all-time high. We still have this cup and handle formation here with a pivot at 73.50. And it looks to me like the shorts are likely to get squeezed. There's just not a lot of incentive to push currently, with the delta being negative and crawling downwards as we push prices higher. So we're in a holding pattern, and that's likely to continue into today's session. So coiling balance is likely to lead to imbalance. The market can only coil so much before one side is wrong and has to cover, and therefore feeds into pushing the market in the opposite direction when stops get triggered. So that's where that stands. While we're here, I want to remind you that today I'm going to be on a panel with Dr. Brett Steenbarger at 4:30 Eastern. I hope you can register. It's a new registration process through Futures.io at 4:30 today. I'll be on for about an hour. The topic is what you want to know but are afraid to ask. We're ready to take on whatever question anybody throws at us relating to trading psychology, the industry, whatever it is you want to ask. You can join today and ask it. The link for this is ft71.com/FIO March 2021. I'm going to plop that into the YouTube chat to make it easier for you to register. Please hit the link and register. There it is. Oh, it's too long. Let me just fix this a second. Sorry. All right. There it is in the YouTube live chat. Anyway, this will be today at 4:30 p.m. Eastern U.S. time, 3:30 Central, 9:30 p.m. London time. I'll catch you in there. Let's take a look at what's expected for today. So as I set up this chart here. All right. Okay, so let's take a look at what we're seeing for today. Here it is. So today, what did we do yesterday? We consolidated, we pushed down, and then we came back up, pulled back higher low in the overnight session, attempted to push into yesterday's high and failed to do so by 2 ticks. So the overnight session is inside of yesterday's session. So the pattern looks like lower high, higher low, lower high, and holding steady. So this looks to me like a bearish pattern here. It looks technically, traditionally, we would expect it to look something like that. Very, very tight market, and we're battling this 52, 52 to 54 area still as we sit here at 54.75 currently. Very hard to determine what it's trying to do. I'm going to get rid of these lines here. But my expectation is responsive selling back into yesterday's range. Back into yesterday's range, expecting it to consolidate here at the 39.45.50 area. This is balance for this region. Looking for it to sit sideways. We do have PMI at 12 minutes after the open. And then I'm expecting it to base and then to squeeze the shorts here and push into this upper distribution 61 and 64 today. Not really hopeful in terms of range, in terms of cycles or rotations and opportunities. Really not expecting too much here. I think everybody's just sitting around waiting for the next move. Secondary, open auction that squeezes higher, pushes into 61, then gets an impulse down, which brings it back into the overnight point of control. It attempts to push higher again, comes back, and then squeezes lower to hold yesterday's range expecting a higher low. Regardless, expecting a higher low, higher high in today's session, and then looking for tomorrow and Friday. Friday we have the non-farm payrolls at 7:30 Central, 8:30 Eastern, and then the S&P closes at 8:15 a.m. Chicago time, 9:15 a.m. Eastern US time. So the market is technically closed on Friday. Normally we don't trade on Good Friday, but for some reason the CME has decided to open up and to accommodate the unemployment figure coming out. Again, the unemployment rate and non-farm payrolls are expected um, to be released at 8:30 Eastern time on Friday. The markets are going to go into a halt at 9:15 Eastern a.m. Eastern, and they will remain closed until 6 p.m. on Sunday. So if you are stuck in a position at 9:15 a.m. on Friday, you're holding it through the rest of Friday, the whole of Saturday, and most of Sunday. Pay attention. The number is still going to be released at 8:30 a.m. So we're coming into that. We're likely to see some volatility as we reach the end of month, the EOM and EOQ, the end of quarter, at the end of today. So I'm looking for this thing to make a move at the end of the day, and then I'm looking for positioning on Thursday into Friday's non-farm payrolls. Does that make sense? As far as the registration for Futures IO, the registrations have been incredibly low. The registration is open to anybody. It's supposed to be, but if you're having trouble registering for the FIO webinar, again, I'm going to put it up here. The link is ft71.com/FIO March 2021. If you're having a hard time registering, please let me know, because the registrations on this are suspiciously very low. Normally, I would have 300 to 400 registrations on a webinar like this, and on an AMA or a general webinar, and we're like at 22, something like that. I feel like this new process, there may be an issue with it. FIO is changing how the registrations work. They're moving to Zoom, and that's where we stand. I'll let them know if it's blocked for elite members, then that's a big problem. I'll let them know that should be open to the public. Thanks for letting me know. Hopefully, you can try again. I'll shoot a message out over Twitter to let you know if that's been fixed. Good luck.